Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DeepSource interim report. DeepSource Holdings Limited offers a diverse range of businesses and services across various sectors. These include commodities trading, bulk commodities, petrochemicals products financial services, plus securities and derivatives financial services, plus margin financing services, plus fund management services, plus futures contract brokerage services, plus clearing services, plus derivatives consulting services trading services, plus commodity trading services, plus interdealer broking in over-the-counter markets, plus derivative trading services, structured trade finance operation services, money lending business brokerage of physical commodities, trade facilitation services for gold and silver freight services agency business loan financing activities. The significant rise in DeepSource Holdings stock price. An analysis DeepSource Holdings Limited has experienced a remarkable surge in its stock price over the past year, with shares increasing by approximately 85% over the last 365 days. This significant rise can be attributed to several factors, although the exact cause remains unclear. One possible contributing factor is the company's reported increase in attributable profit during the first half of 2025, which rose to $321.8 million from $194.4 million in the year-ago period. However, this increase in profit may not be the primary driver of the stock price surge, as the company's return on equity, ROE, was found to be unattractive compared to the industry average. Despite a substantial 62% drop in revenue for the first half of 2025, the company's ability to maintain profitability suggests that it has adapted well to changing market conditions. This resilience may have contributed to investor confidence and, subsequently, the significant increase in stock price. The primary drivers of revenue growth or decline can be summarized into three key areas. Firstly, a significant increase in sales from future contracts contributed to revenue growth, with a notable plus 108.6% rise. Secondly, certain business segments, such as the Singapore segment and distribution, trading and processing business, experienced substantial revenue increases of 45.33% and $9,737,116 respectively. However, these gains were offset by several factors that led to revenue decline. A sharp decrease in trading volume of silver and gold ingots resulted in a loss of revenue. Additionally, fluctuations in commodities prices and exchange rate changes, particularly the RMB/US dollar exchange rates, had a negative impact on revenue. Overall, these factors highlight the volatility of revenue growth and decline in the industry. The company's financial performance indicates a consistent generation of positive operating cash flow. The data shows that in both 2024 and 2025, the net cash generated from operating activities was substantial, with $4,357,075 in 2024 and $1,379,324 in 2025. This trend suggests that the company is efficiently managing its operations to produce a steady stream of positive cash flow, indicating financial stability and health. The company's financial performance reveals a mixed picture regarding its debt level and interest expenses. While the interest expenses have decreased significantly by 39% from $14,637,000 to $1,865,000, indicating a reduction in finance costs, the total loans and other borrowings have increased substantially from $142,930,000 to $111,452,000. This increase in debt level may offset the benefits of lower interest expenses, suggesting that the company's financial situation is more complex than initially meets the eye. Management's outlook and strategy. The company is prioritizing long-term growth over short-term gains, as evident from the decision not to recommend an interim dividend. Instead, management is investing in property, plant, and equipment, totaling approximately $9,698,000 to drive future expansion. In addition to capital expenditures, management is also focused on mitigating risks associated with regulatory changes and market fluctuations through diversification. Furthermore, they are committed to attracting and retaining top talent by offering competitive remuneration packages and potential share options tied to group performance. The company has demonstrated its commitment to returning value to shareholders. In 2024, it paid out a significant amount in dividends, totaling $169,427. Additionally, the company had an approved share buyback program with a budget of up to $170 million, although no shares were repurchased as at the date of report. Concerns about inventory buildup or supply chain disruption are evident in the company's financial summary. A significant decrease in cost of sales compared to revenue $9,761,575 versus $10,132,488 on page 6 suggests potential inventory buildup. Additionally, a decline in raw materials and finished goods inventory levels on page 24 may indicate supply chain disruption or inefficiencies. Furthermore, increased purchases and sales with related parties on page 33, accompanied by decreased logistics fees, raises questions about the company's supply chain management. The decrease in revenue from various commodities and processing income on page 42 also points to potential disruptions in the supply chain. That concludes the financial summary for Deep Source. Feel free to comment below, and I will be happy to answer them when possible.